Those are paper positions. And when this game ends, paper is going to be meaningless. And I've said this for 10 years, that there is a scenario, and I think it's more likely now as time is going on, there is a scenario where you could see the paper gold price get absolutely slaughtered and go to $10 an ounce, offered, no one willing to buy. And then in the physical markets, you could see gold at $10,000 an ounce, but you can't buy any because there's not available. Gold went straight down off the open. They've not been too weak after that. I think gold was off maybe 70, 75 bucks. It's down another $20, and silver was like down $1, so it's down another 10, 20 cents. But I think for sure you're seeing some covering here. And I mentioned to you before the call, just to pull that chart up on gold. If you look at gold, if you look at silver, if you look at the HUI index, you look at the bottom right-hand corner, if you could scroll down a little bit so people can see it. There you go. Right there where your cursor is. It looks the same or very close for silver. The HUI actually had started to cross over on Thursday and Friday to the upside. Once the MACD crosses either upward or downward, then you get momentum players coming in. So the thought process in my mind over the weekend was, okay, let's see what happens on Monday, because even if it's a flat day, these MACDs are going to cross over to the upside, and you'll start to get momentum buyers. Well, they can read charts just as well as I can, or you can, or any of us can. They saw that happening, and voila, $1 plus on silver, almost $100 on gold. And that's not going to negate the crossovers, but it will delay them, maybe delay them 3, 4, 5 days, maybe delay them, if they've got a little bit more powder to get gold down another $50 or $100, they could delay it for a couple weeks. But that's all they're doing is delaying it, because if you look at just the basic chart itself, this thing, gold has been an absolute tractor in first gear the entire way up. First off, were we due a correction? Yeah, we're due a correction. We no longer were overbought. It looked like we were bottoming, and now it looks like they're trying to delay the bottom. But the bottom's going to happen nonetheless. And I think by year end, you'll see new highs on gold. And I'd be pretty surprised if you don't see silver at least sniff 35, if not go through it. You're looking at, those are COMEX positions. And we're very, very close to COMEX and LBMA becoming irrelevant, because gold and silver, they're global assets, and you have global players buying the crap out of both gold and silver. Not so much silver, from a central bank standpoint, but what was it, 2 or 3 weeks ago, Russia stepped up and they said, well, yeah, we're going to start buying other commodities. And I think silver was the first one that they named. It's not going to take a lot of money in silver to really upset that market. And you're talking about, that whole thing with the COT, commitment of traders. Those are paper positions. And when this game ends, paper is going to be meaningless. And I've said this for 10 years, that there is a scenario, and I think it's more likely now as time is going on, there is a scenario where you could see the paper gold price get absolutely slaughtered and go to $10 an ounce, offered, no one willing to buy. And then in the physical markets, you could see gold at $10,000 an ounce, but you can't buy any because there's not available. And that's the dichotomy between paper and real metal, because these buyers globally, they don't buy COMEX contracts. They don't buy LBMA contracts. They buy ounces and they say, deliver me my stuff.
Yep.
So we're getting much, much closer to that, Chris. I think you can look at that as a FAFO moment. For the U.S., Britain, France, basically NATO, to allow Ukraine to fire missiles, intermediate missiles inside of Russia. And understand that those missiles, they can't be shot or guided by Ukrainians. The only people who have the ability to guide those are Americans. So basically, that is the United States firing on Russia. And when I say it was an FAFO moment, Putin's response was to fire an intermediate range missile that just so happened to be hypersonic. And that's the first hypersonic real, not a test. It's a real use of hypersonic missiles 4, 5, 6 years ago. I used to do podcasts when I was partnered with Jim Sinclair, and he used to always say about hypersonic, if you can't catch it, you can't kill it. And what Putin just did was put the world on alert that Russia's military is the biggest, badass military on the planet. I mean, they have weapons we don't have. They have weapons we can't defend against. They could hit anything anywhere in the world, and they know it's going to hit because it can't be defended against. So for the markets to be doing what markets are doing now, I think like everything is backwards. Everything is upside down. There should be panic. There should be fear. Oh my God, the United States is no longer the biggest, baddest bully on the block. NATO basically has become irrelevant. There's a couple thoughts on this. One, Biden is trying to get World War III started before Trump can even get in, so he inherits World War III. Another thought is, if there was global conflict and you had nukes being lit off, around the world, would there be a transition of power? Would they cook something up saying, well, yeah, we'll install you, Mr. Trump, once things calm down, but we're in the middle of it. We can't change the succession of power or whatever. Putin obviously has to be thinking Trump is a guy that he can talk to. Trump seems to not want war. So, hopefully Putin, Russia remain, I don't know if the word is tolerant or not, but they don't come back with any real severe response between now and when Trump gets in. And let me just to clear things up. The picks that Trump has put together for his cabinet, and I posted this, I think, on Thursday or Friday. And, I had hopes, just like, a lot of people still have hopes that, Trump's going to come in and clean things up and blah, blah, blah. But if you look at his cabinet picks, this is like, it's deep state all over again. The Treasury Secretary, where are his roots? George Soros. Then you got, I think it was the head of the FDA, the lady, who still proposes masks, thinks that the vaccine is a good thing. Trump needs to come in and say, I screwed up. But you're not seeing any of that. And you're seeing a bunch of his picks have some very serious deep state ties. So for him for people to hope that he's going to come in and clean, drain the swamp, I don't know. I'm highly skeptical at this point.
Bill Holter, a precious metals analyst, predicts a decoupling between paper and physical gold prices, where the paper price might plummet while physical gold could surge to $10,000 per ounce, but with limited availability. He attributes current market volatility to manipulation through platforms like COMEX and LBMA, and foresees these systems becoming obsolete as global demand for physical metals rises. Holter emphasizes the growing shift of economic power from the West to the East, a transition from fiat-based systems to gold-backed monetary systems, and the role of central bank buying, particularly by countries like Russia. The discussion also touches on escalating geopolitical tensions, such as NATO's involvement in Ukraine and Russia's military actions, which Holter suggests could destabilize global markets and further bolster safe haven demand for metals like gold and silver. He warns of potential systemic crises in fiat currencies and recommends holding physical metals as a hedge against inflation and market disruptions. Bill Holter, a precious metals analyst, predicts a decoupling between paper and physical gold prices, where the paper price might plummet while physical gold could surge to $10,000 per ounce, but with limited availability. Thanks for watching. Share your valuable thoughts in the comments below, and don't forget to like, share, and subscribe for more daily updates. Hit the notification bell so you never miss out. See you in the next video.